everybody. Welcome to another episode of Hotel Tech Innovators and Influencers. Of course, that's Michael Frankel over there. I'm Glenn Hausman. Michael, it is so great to see you. We've been too busy. We haven't had a chance to get one of these out in a while.
You know what? Summer left us, and now here we are sitting in snowy Colorado Springs.
That's right.
At the gorgeous Biltmore Resort.
Right. How awesome is this old school library?
What could be bad about that?
There's nothing bad about. Well, maybe I'm a little delicate and it's a little chilly outside, but other than that, I think we're okay.
Cold. It's cold.
A little bit. First snowstorm I've seen this year. It's nice to see snow again. We don't get much of that in the Northeast anymore, not like we did back in the 70s. But
stay tuned.
Stay tuned. We'll see what happens this winter. And I know that you guys really turned in for out-of-date weather reports because that's what we're here for. But more so, we're all about talking about hotel technology. It's right there in the name, the innovators and the influencers. They're making big changes. They're going to take us into the future when it comes to hospitality technology. Who we got today and what we're going to talk about?
Well, we have both an innovator and an influencer, Chris Hemmeter, managing partner or managing director, Chris will correct me, of Thayer Ventures, which is the venture capital firm investing in travel tech, has brought to the market some of the most innovative, interesting young companies in the past 10 years. And he's all over.
Oh, let's find out if you're right.
Let's do it.
Chris, welcome to the show, man. How are you?
I'm good.
Hey, Chris.
I'm good. Thanks for having me. Michael, how are you?
It's so
good to see Chris.
It's so great to see you. So, Michael, why don't you kick it off with the first question?
All right. Well, Chris, a couple of weeks ago, we were in Manhattan. We had the Thayer Ventures annual meeting, which brought together 250 of the most important hotel brand leaders, decision makers, investors, innovators. It's really an annual rite of passage that helps the industry understand where things are going. Where are things going? What were the key takeaways from the meeting a couple of weeks ago?
Yeah, well, it's amazing to me how eager everybody is to get together again. I mean, I would say that one of the big takeaways I had right off the bat was how enthusiastic and warm the reception was, and the hugging, the high-fiving, the huddling in corners. I mean, anybody who called the end of face-to-face collaboration as part of the phenomenon of COVID has just gotten it completely wrong with all.
Chris, I will say the hugs per human interaction ratio has changed dramatically since pre-pandemic. I mean, I can't see anybody without saying, "Oh my goodness, it's so great to see."
Totally. So it was. So I think there was a lot of energy in the room. I think that the fundamental takeaways are sort of some consistent themes that we've been seeing over the last couple of years, but also some new insights. I think some of the consistent themes are that, travel just has great power, and the need for humans to connect and collaborate is clear and present. We're seeing it in all of the forward booking demand numbers. We're seeing it in the earnings reports and conference calls with the big accommodations companies. And we're certainly seeing it in the energy of our portfolio companies. I think the mix is coming back differently, which is super interesting. Obviously, we all suspected that there'd be a surge in leisure. I think that that surge has turned into a more sustained flow of demand than many thought. I think a lot of us thought that it might peter out after the initial sort of revenge travel surge of the summer. That's not the case. I think we've been really surprised to see group coming back faster than transient business travel, which is, makes sense in retrospect, but a lot of people called group to come back later.
Well, again, I think some of that with the group thing, and maybe a part that people weren't thinking about, was all of these folks had these events that were on the books, and they need to get those events done because they sold a lot of advertising, they sold trade show spots, they sold sponsorships, they sold whatever it is, and they need that cash. So I'm not really surprised that the meetings are coming back in that sort of sense. I would like to see that transient traveler coming back a little bit more, but I'm getting the feeling that that's happening. Are you starting to see that transient business traveler as well return to the market?
Yeah, I absolutely. I mean, I've been traveling as much as I was in 2019, and I'm seeing absolutely packed airplanes and hotels full of business travelers. There's no doubt about it. I also think this work from home phenomenon, which is normalizing. And let's be honest, there was work from home before the pandemic. It wasn't like no one ever worked from home and all of a sudden there was a pandemic and everybody worked from home. So we're seeing some normalization of that, but some of the folks that are working from home are moving around more. So, whether it's coming in to meet with other colleagues at HQ, or whether it's taking advantage of their flexibility to visit friends and family, there's just busier and busier flights midweek, and certainly hotels are jammed. Unless, of course, you want to come to San Francisco, at which point, have at it.
Right. Well, there's still a few cities and that urban cores that are having the problem, but in aggregate, and if you check out our no vacancy shows we just had on Jan Freitag, and we talked all about the specific numbers that go behind all of this. So check that out, novacancynews.com. But Chris, what are some of the predominant ways now that you're trying to leverage the opportunities that you're seeing out there based on the fundamentals that are in the market?
Yeah. So, I mean, when we started this business about 12 years ago, we had just a fundamental thesis that disruption in the broader travel value chain was finally going to trigger more experimentation and adoption of technology, that we'd see, structures that have been in place since the 1940s finally begin to change. Frankly, it took the pandemic to kick that into high gear.
I was just about to say that exact thing. We're big believers, with all the stuff that I do, that it is the acceleration of trends that really happens. So stuff that we thought would be 5-10 years out is hitting us right in the face right now. Right, Michael?
Yeah. I mean, so it's acceleration, but there's a qualitative shift, right, in the technology that's being produced and the solutions that are coming out there, right? So what are some of the things you're seeing, Chris?
But I think some of that is driven by increased experimentation by the incumbents, the suppliers, the large intermediaries. I mean, everybody's trying out new things, which, that's the fertilizer that drives startup energy.
Right.
I mean, look, I think that what we've seen, broadly, is with the rise of the entire alternative accommodations or short-term rental category, that you've seen hospitality begin to respond and really drive deeper into sort of an unbundling of the product. We talked a lot about that at our annual conference. That obviously requires far more flexibility in the core hospitality technology stack. I think we no longer live in a world where we're just going to accept on-premise boxes that cost $15,000 in 6 months to get an API opened up. That's just irresponsible as an operator to run on that kind of a stack. And frankly, what's super interesting about that is that, at least in our view, inertia was one of the biggest blockers to innovation. And inertia was that you had a micro system on-prem, and that's worked, and it's just fine, and RevPAR was rising, and you didn't really care. Now, all of a sudden, the world's changed. But at the same time, that sort of legacy 800-pound gorilla has said, hey, we're going to migrate all of you off of that on-prem stuff to our new cloud stuff.
Right.
That act alone sort of busts up the inertia, right? So as soon as you say, hey, we're going to change, people say, okay, I guess we have to. What else is there out there, right? And all of a sudden, every other cloud player becomes a competitive option, because if you're going to get off the old stuff onto something new, you might as well look at everything. So that act of Oracle's migration to the cloud, I think, is opening up a whole new opportunity for the core of the hospitality tech stack to flip. And by flip, I mean, to fundamentally be rethought. And what's super interesting, and I think the pandemic helped to accelerate this too, is that suppliers, operators, brands, and so forth, and owners are thinking about the model fundamentally differently. They're saying, okay, if we're going to change everything, if we can't hire people to come back, if we're under all this pressure, let's rethink the way we deliver what we call hospitality in the first place.
Right.
Because the modern traveler is far more comfortable with varying degrees of automation and self-service without thinking of that as a degradation of hospitality. That reduces the need for labor, which increases the production of real estate, which in the end of the day is what this industry is, right?
Right.
Hospitality, hotel industry is real estate business.
Well, what's,
all right. So I think we need to break this down a little bit, because there's a big, massive chunk there.
Yeah. I mean, I was going to, we've got big brands, among others, who are investors in the Thayer Ventures funds, right? What's been astounding to me to watch, right? I mean, working with startups over the past 10, 15 years as I have, startup founder what are your goals for growth? Where would you, well, we'd like to be at Marriott, right? Okay. You're not going to be at Marriott anytime soon. 10 years. Guess what? Marriott's talking, Hyatt's talking, Hilton's talking, right? So what are you hearing what are you seeing on the brand side that gives you confidence that there's a real shift and movement here?
Yeah, well, I mean, I think that you saw the breakup of inertia there as well. Pre-pandemic, those large corporate entities were very thick, right? I ran into cross-functional teams doing an analysis of housekeeping software, and the report was due in 3 years, right? I mean, that whole apparatus has changed, and the organizations, because they had to broadly just, furlough employees, it gave the leadership of those businesses an opportunity to rethink the way that their organizations run. And you guys know that when you have a successful business, they get rigid.
Yeah, absolutely. I've been out there screaming and yelling over the last 2 years that this is the most unique opportunity that we've ever had. You can hit that giant reset button. Nothing is sacrosanct anymore. And you can make those big, bold changes right now. But it's good to hear that these companies are actually doing that sort of thing. And I want to break down that chunk a little more, because you're talking about going out into the cloud. And the first thing that was coming to my mind was interfaces. Younger people are very focused on a different type of interface than the ones that we grew up with that still seem to be in some of these hotels that are out there right now. So when you get things into the cloud, and tell me if I'm right on this, and you have a better interface for the people to use that they're more comfortable with, that's more intuitive, it's going to help that employee engagement while simultaneously lowering the number of hours that are even needed in order to keep all of these things running smoothly. Is that an accurate statement?
That's the idea, right? Yep. Once you create flexibility within the form factor, and you have industrial grade APIs, then you can have, experimentation at every level of the value chain. So, that's the point, right? Is that now software developers, entrepreneurs who have been in hospitality their entire career and have been pounding the table in frustration can now come forward with ideas that can be tested.
Right.
Where in the old days, I mean, we know this, right? If you wrote something up, if you created something and you wanted to test it at a hotel, how long did it take to get that API opened on an Opera box? And how much did it cost? It just didn't happen. So no one ever got to try these things. Now we're testing and iterating. And look, none of us know what the right answer is. I'm not going to sit here and tell you I have the perfect design for hospitality software in my head. I don't.
But you could fail, and you could fail quickly and then go on to the next iteration.
That's right.
That opens up the world of possibilities, right?
And by the way, it allows for the localization of testing. You don't have to think about testing something with global scale. I mean, that's one of the things you think about software is if your mission is, look, we're only going to deploy things that are going to work every place on the planet. I mean, that's ridiculous. You got to have flexibility where you can do localized experimentation. You might discover that something works in Singapore very differently than Bogota.
Right.
And you need to have the flexibility to work with what you got. I think that's what we're starting to see more and more. What will be really interesting is if the conversation begins to approach sort of how we define brand standards in technology terms, right? Historically, everything was owned in part of a brand standard. Now we might be moving to a world where, owners are saying, hey, let's redefine that. I want more flexibility because my local, operation, I think sort of will run more. I can get better performance if I have some flexibility in the software. And if the brands begin to think about platform versus application with respect to their brand standards, that could be interesting.
But what is the benefit to the brand? Because currently right now, companies need to pay a considerable amount of money to be in that ecosystem and be in that conversation. So they're going to have to let go of a revenue stream theoretically, right? So is that an accurate assessment?
Or take a cost.
Right. So
take a cost.
How does that affect the big picture, if I'm accurate?
Well, I don't think that they would be letting go of a revenue stream by relaxing brand standards around certain aspects of tech, because they weren't monetizing every aspect of tech. They were just telling the owner what they had to buy and use, right? So, and in the end of the day, real estate is modernizing fast, and real estate went through its own shock. And there's a lot of people that want to help a hotel owner monetize their concrete box. It's competitive. And so, what the brands have going for them are incredible global platforms. I mean, 170 million Bonvoy members is impressive, right? Hyatt's focus on luxury leisure and what they're doing with World of Hyatt and how fast it's growing is incredibly impressive. And frankly, I think what brands realize and what we've seen the successful brands do, it used to be that they were all about just, management. They could run your hotel better. Right. Then it was sort of, we're all about distribution. And frankly, now I think that that's coming back. It's a little bit of, hey, look, we've got the distribution, we've got the systems and tools, we've got the reach and, and recognition. But frankly, it's those big loyalty programs, those point programs that are massive. I mean, the Marriott Homes and Villas took off when it originally launched, but 80% of the people that stayed in those were Bonvoy members.
Right.
That's powerful.
And that does make sense. And those loyalty programs have really been fueling a lot. Michael,
I was going to say, Chris, you may not have the comprehensive answer. None of us do right now, but you do have companies, right? Thayer Ventures is invested in, tell us, 30, 40. Give us some names. What's some of the most interesting innovation that's going out there in your portfolio?
Yeah. And so, I'll come right back to that. But the reason, I say I don't have the design in our head, but what we do have is the ability to take a look at things that have momentum, right? So we're Series A and Series B investors, which mean we're a little bit later stage. We're not backing those companies that say, I have an idea, I want to go out and test. We're backing the companies that have been testing and are now commercializing. And so we accelerate them, right? So that gives me the benefit of seeing, are the dogs eating the dog food? And if so, we want to put some horsepower behind it.
Right.
Well, I mean, look, one of our big bets in our last fund is Muse Systems, Muse cloud-based property management system. Our thesis was you're not going to see a successful, this is at least 5 years ago, cloud PMS player start in North America, way too much chain concentration. It's going to be difficult to get traction early. We bet on a company that's focused in Europe. Muse now operates in over 60 countries. They've mastered that regional tax and regulatory complexity in the way they've architected their system. That's been a real good one for us.
So, Chris, just let me translate for people that don't know why you went with that philosophy, because there's a lot more independent hotels over in Europe. It's almost like the inverse of what we have here with branded hotels. Right. So each hotel has that power to make their own decision.
Exactly. Fundamentally different marketplace. I think at least, 4, 5, 6, 7 years ago, if you were to launch a cloud-based property management system to compete in North America, you were going to struggle to get installations in place, to get customers, because you're not going to launch with feature parity to Micros. There's just no way to, to Oracle stack. So, but in Europe, as you say, very different hotels. There's a lot more smaller hotels. There's much greater fragmentation, but also within each sort of micro submarket of Europe, there are very complex tax and regulatory requirements that have to be architected within the PMS. Sometimes it's data sharing with authorities. Sometimes it's just, specific tax calculations, which are complicated. And then finally, of course, creating a sales organization that can sell in, Spain, France, the UK, and the Netherlands is really different. And a lot of American companies that just say, we're coming to Western Europe,
Yeah.
In the face.
So they did the hard stuff first and they're battle tested, right?
Yeah. And it gave them time to perform and build more features and add on to their capability to, create more power in their management company. And now they're a world-class player ready to compete with anybody in the marketplace. So it's, that was a good one for us. We've recently, in our most recent fund, we've invested in a company called Deal Engine, predominantly focused in the air space. And it sort of plays into an area of interest of ours, which are these, API delivered services that actually work with and live on top of the legacy tech stack. So, if you think about core PMS, we're kind of talking rip and replace, right? You have to get rid of your old PMS, right? That's hard. Rip and replace is expensive and slow and so forth. There's a lot of legacy infrastructure in travel, right? With all due respect to Amadeus. These sort of API delivered services are really unique and interesting ways to create a lot of value for users by living on top of the existing tech stack. So, Deal Engine is specifically doing that in the refunds and changes within air, and now with a little bit more on attachment. So that's taking off. And then we recently closed on an investment in a company I'm incredibly excited about. But you should know in venture capital, you're always the most excited about your most recent investment.
Of course, right?
Yeah, always your youngest kid.
That's the moment when you feel you're so right.
Yeah. So tell us about it.
So Point.me is our most recent investment, and Point.me plays in the world of loyalty and reward points. So whether you're talking direct airline points because I fly United all the time, American Express points because I use my Amex for everything, Chase, whatever it may be. Right. They sort of sit in the middle of that incredibly interesting world, about $160 billion worth of points out in circulation, incredibly complex rules about how to redeem them. Sometimes if you want to fly from here to there on United Airlines, the best path for your points is to convert them to Turkish Airways and then backdoor in, and you get business class seat for 35,000 miles.
So this simplifies that for people because it's right in the middle, and it's doing a lot of that hard work for you.
It's creating an incredible amount of consumer value. Basically, in aggregate, they're getting about a 10 to 12 to 1 multiplier on people's miles.
Wow.
By just helping them sort of work that. And so that's becoming super interesting to the issuers. So the company has a great consumer interface. You can go to Point.me, and you can, if you're sitting on a bunch of random points from different carriers, try it out and see. You can fly your family business class to Europe for 70,000 miles a person.
Thank you, because
that's going to give my wife an entirely new thing to do in the evening when we're watching Monday Night Football, right? I mean, that's just a whole new dimension.
This is exciting
to what, right?
I know
what we can do every night.
Well, I've got a gajillion miles with my airline because I've been trying to save up to take my family to Japan, and we've been trying for 3 years. We haven't had much luck with that one. I don't know why, but now that I know about this, I might be able to get everyone first class and not have to use all my preciously earned miles.
Check it out. Check it out. You might be surprised. But the other thing that's super interesting about the company is the issuers of points care about this too.
Sure.
Right? If you're a major card platform, for example, you would love your card holders to experience more value when they're trying to redeem their loyalty points for travel.
Right.
Because you would encourage them, therefore, to use their card when they're out shopping and buying things and whatever. And that's the holy grail of credit card companies, right? So, and airline companies are super interested in this category too, especially the international carriers that are creating partnerships with the big US carriers. If they can get more and more enrollment of new people on their platform, especially people from North America, because you have to sign up for, Air France in order to redeem your tickets back for, your points. So that's a real engine for them to create enrollment. So a lot of things, both in B2B and B2C, that Point.me is doing. And ultimately, we think the holy grail here is to create a real, true, point and loyalty marketplace where all reward points are connected, and there's just an extremely efficient path for people to use it. We'll see. That's years down the line, but that's my interest in the company for sure.
So, Chris, some of our listeners maybe are not as steeped in the world of venture capital and investing in these companies as we are, right? Let's pause on Point.me for a moment, right?
Yeah.
Tell us about the path, right? What does Thayer Ventures bring to the table?
Good question.
How do you work with them, and where would you like to see them go over the next 2-3 years? What are the major milestones? How does it work? How do they get from Series A to where?
Right.
Right.
Well, so
could you start with how you get plugged into even hearing about these?
Yeah. So first of all, I think, every investor sort of has a defined strategy, usually both, right? A sector focus or a thematic focus, but then also a stage focus. So when anybody's building a company, there's going to be multiple stages. There's that initial stage where you convince friends and family and you put up some of your own dough, right, to get out and do research and kick the ball down the field and see if you're onto something. You begin to sort of see some inclination that you might be onto something. Now you need money to build something and maybe get a beta customer. So that would be an angel round, or maybe what we call a seed round, right? A little bit of money. You can hire a couple of people, maybe a consultant or two, get something built, and then you're in the business. Eventually, you'll get to a point where you begin to raise money from institutional investors. And we use these, what we call Series A, Series B, Series C. These are just different series of preferred stock. We could spend a whole half hour talking about what preferred stock is. I won't. But the point is, we live in that world of Series A. A Series A company is one that's already commercializing a product where our investment is in accelerating their stuff. So companies that are coming and talking to us typically find us and know about us because of our Series A focus. They also know about us because of our deep sector focus. They know that we have limited partners, so investors in our fund from across the industry. So, you know, and myself, by the way, as a founder, I've you know, founded 7 companies across my career. You know, I'm all about adding value to the investments that we make. And for me, value add is supporting business development, sales, and strategy. It's opening doors, making connections, doing the work in between the board meetings to help these guys experiment more, iterate on product, get in front of customers and see if they can break through. So, you know, in the case of Point, I knew some early investors in the company. They knew the company was raising around. They reached out to me and said, you really should look at this. That happens a lot.
Yep.
Took the meeting. You know, we look for certain things. Is it a big, large, addressable, interesting, dynamic market? In this case, yes. You know, is there a pain point of scale being addressed in a novel, defendable way? In this case, yes, right? Do the unit economics stack up? Is there actually a way to monetize the solve of those problems? In this case, yes, right? So we then negotiate with the company. We look at their financial model in incredible detail to figure how much time do we need to buy in order to prove the company out to the next level when the next Series B, in this case, would be interested in financing the business. So we think very hard about what needs to be true for this company to get back in the market to raise a big financing. And then we make sure we have at least 9 more months of cash in the company beyond that point, that projected point. And then that's the size of the round, right? And then we all start working towards those milestones, and the company is growing. And then as it approaches that Series B level, we help them go out and talk to more growth oriented venture firms that are going to write bigger checks. And, you know, in theory, they write a big check. Now, in this environment, in this economic environment,
that was my next question. Yeah.
There's a little tweak to that because you can't rely on that. Even if you hit those metrics, you don't know if we're in a bad recession, is a Series B even going to be there? So now we're very mindful of the other investors with us in the Series A. We want to make sure everybody is bringing strong reserves. So when we make an initial $5 million investment, we've got another 5 reserved to go into that company, right? So if everybody around the table has solid reserves and we're hitting our key performance milestones and the market's dead for new financing, at least we've got the wherewithal as a group to continue to finance the business to ultimately a success. Because frankly, you know, I exit this business in 6 to 8 years.
Right.
So the recession is not really relevant to the return of capital to my investors because I don't think we're going to be in a 6 to 8 year recession.
Right.
Well, anyway, it's all about buying.
It could actually be a good thing, right? Because it gives everybody a chance to really buckle down, reinvest, double down, and figure out the business strategy that works. Right?
So
well, if you actually, it's interesting. If you look at the history of venture capital, the highest performing years are venture capital funds that were created during recessions.
Well, and Airbnb in 2008, right? Could you have a clear? Right?
Would have loved to have been in the Series A of Airbnb.
Well, wouldn't we all?
Then I'd be talking to you from my boat.
Yeah. So you mentioned 6 to 8 years. Is that typical for the type of investments you do? And then how does exiting work?
Yeah. So, I mean, look, one of the things that's challenging about travel tech is it's not as liquid as other tech markets.
Right.
Right. So, you know, you've seen other markets where venture firms are seeing companies, you know, that they're in for only 3 years and then they sell them and they, you know, there's more liquidity in their space. It's not really true in travel, at least not yet. Something we hope to see more of, and we feel like it's growing. But so we're seeing, you know, really more the 6 to, frankly, we've got some companies that we've been in for 12 years. Right. So that's not ideal, but, you know, is what it is, right? We create a basket of investments. Some of them hang on forever. Some of them exit early. But anyway, so exits are typically, you know, one of two. There, it's either some sort of an M&A transaction or mergers and acquisition, meaning somebody buys the company, either a strategic or if it's cash flow positive, a private equity firm, or the company could go public. I mean, Sonder went public, albeit through a SPAC. And we have some other, you know, companies that definitely, I believe, will achieve that kind of scale when the IPO window reopens sometime in 2025.
Right.
All right. So here's the big question, Chris. When you're evaluating a company, I've been wondering this for years. We've been talking about startups for years. Is it the jockey or is it the horse?
Oh,
You know, honestly, more and more these days, I'm beginning to realize that the jockey matters the most. But you can put a great jockey on a mule and you're still going to lose the race, right? But you put a bonehead on a thoroughbred and he's going to break it. He's going to break a leg and collapse over the rail. So, but in the end of the day, I've had more great ideas stumble because of people than I've had, bad idea. I mean, you know what I'm saying? I've seen the effect of so we do a ton of work and it's so subtle. It's not always just skill.
Right. So if you, so what you're saying is if you have a mule, chances are you're not going to be able to save the company. But if you have that thoroughbred, if you got that winner, you've got to have the right people behind it, or else you're risking turning it into a mule.
Yeah, but to take the metaphor, a painful step further, if you have a really great CEO on a mule, he might say, "Why the hell are we in this horse race? Let's go into the transportation business." And the next thing you know, your mule is taking somebody over the hill, and you're making money.
Right.
So
leadership
matters.
What does a great jockey look like? Right? When you're out there evaluating companies, what are the characteristics you look for? And listen up, audience, right? Because you're in your garages, you're thinking about these next ideas. Here's what the money says you need to be.
Honestly, Michael, I wish I knew the answer to that. And I think that's what makes this so interesting. What I do is that there is no clear answer. I do know there are a few things that are really important. Coachability is one of them.
Yeah.
I'll tell you, one of the worst things, if you're a startup founder, the worst things you can do is argue with an investor when you're making a pitch.
Yeah, I've seen it.
It doesn't mean you have to agree with them, but there is a way where you can appear to at least be considering what they have to say.
Right.
But, coachability is critical. But there's no magic, right? Sometimes the leader who can sell ice cubes to Eskimos is the guy. Sometimes, the heads down nerdy person who doesn't make eye contact, is the gal or the guy. I mean, I wish there was a clear formula. I do know that, I think honesty and integrity is critical, but sometimes people who are not honest and have low integrity are really good at hiding that fact.
Right.
Yeah.
Right. So it's a tricky part of the job.
So how many companies have you evaluated? Thayer Ventures has been in business, a dozen or so years?
Yeah.
How many companies would you say you've looked at over the course of that 12-year period?
And what percentage do you actually invest in?
Yeah.
Yeah. I think I probably see a flow of anywhere between, 5 and 8 companies a week.
What?
Yeah. And many of those get brushed by pretty quick because I just don't think, travel inspiration apps are where I would invest. But then we might take initial calls and pitches with 3 or 4 a week. And that's just me. My partner about the same. So, and then in the end of the day, we'll make maybe 5 investments a year.
So if my quick math is right, be conservative, call it 5 a week. That's 250 a year. That's over 10, 12 years. It's at least 2,500 to 3,000 companies you've looked at.
Absolutely.
Right? And portfolios totaling what, 40 at this point? 40
across different funds. Look, and I think it's the highlight of my job. It's what I love doing more than anything, because every conversation with an entrepreneur is an opportunity for me to learn more, right? Every time I sit down with somebody, that's a real person who is betting putting their career on the line, whether they left a job or they're, and they're going all in and they're passionate about something they see. And if you just stop and listen and ask some good, questions and follow the thread of their thinking, it's a remarkable thing. Way more valuable than, picking up a magazine and reading articles or, going through the venture capital magazine or whatever. It's meeting with entrepreneurs. Right. It's extraordinary. Real privilege.
So let's go rogue, and you can take a minute to think about it. Funniest or most unusual thing that you've encountered during a pitch?
Funny or most unusual thing?
You don't have to name names. You don't have to name companies, right?
You know, it's not, every now and then I'll have some sort of a pitch where I dare say it's usually a startup founder of my generation,
right,
is attempting to use buzzwords that are already about 6 or 7 years old.
Right.
And they're pushing on it hard.
Right.
This is user-generated content.
Right. Is it 2004?
Wow. You know, how do I respond? And it's sad because these are like moments where they're presenting their big, this is my insight. Right. I'm sitting there going, oh, this is painful, you know. But I think those are some of the ones that are, I've had a couple of pitches that I wouldn't call it funny, where, you know, we're going through, the person is starting it, and I'll ask a question, a clarifying question about something that'll work. And then they almost come after me angrily, like, you know, that I don't understand, or, you know, it's like,
that's a really good way to woo somebody for money.
Yeah. It's just not, you know, but it's, you know, most people are thoughtful and, you know, doing the best they can. And I've come to learn too, that people really appreciate honest and direct feedback.
Right.
If I figure that, you know, if I can save somebody 6 months of spinning their wheels on something that is, I don't think going to get the job done.
Yep.
That's important, because that's 6 months they can use on something else, so they can pivot and rethink their idea. I mean, I think it's honest feedback's important. And I wasn't always that way. I was always more about, you know, not wanting to hurt somebody's feelings, you know, come up with some sort of an excuse. That's just not right.
Yeah. What do you think about this philosophy out there of all of these companies now buying all these other companies and kind of trying to put together a suite of products to sell to hoteliers versus these individual products that are trying to get sold into hotels? Is there a better philosophy here for investing, or is it kind of neutral?
Yeah, so that typically is done by sort of a different class of investors, which in our world, we're venture capital. Those guys are typically private equity investors. They take control positions, meaning the majority of the stock in a company, where we take a minority of the stock in a company. And they try to do these roll-ups. And look, roll-ups are as old as business, right? Cisco Food Service is a roll-up. I mean, there are so many examples of historical roll-ups. So it's not a bad idea. It can work. It's hard. It's really hard. And I think the fundamental thesis has to be, you know, that there's some sort of, you know, cost benefit, clearly, of consolidating a bunch of companies across a certain, you know, a platform per se. And then there must be some sort of a market benefit. And I do think that most, you know, buyers don't want to have 15 vendor relationships for all of their different point solutions when trying to manage a hotel. That makes sense. Now, whether every roll-up in hospitality software is going to ultimately work is hard to say, because while you're rolling up a bunch of legacy businesses and dealing with the drama of, you know, integrating teams, some other startup can get well-financed and take off, right? And blow right by you. And then you've wasted a lot of money building what is now a legacy company before you even know it.
Interesting. Right. Are you finding that, that some of these companies that like have a single idea, I don't want to say in a specific idea, because I don't want to insult any particular companies, but something that seems like a great idea, but it's easily replicated by some of the other companies out there, does that really put them at a disadvantage at the forefront? Or, you know, do you really need to have something that's really unique in order to be successful? How do you think about those kinds of things?
Yeah, that's super important. And it's an embedded part of the general idea of a business, right? I mean, an idea usually comes from, you know, the identification of a pain point,
right?
Something that's not working. And then there's an idea of how to solve that. But if the solve to that pain point is pretty easy, right, and there's a lot of other people that are just around and could easily jump in and say, oh, I can solve that too.
Right.
And that's not going to really work as a business. Now, but I'll give you an example of a great company that we've invested in that sort of identified a very clear and addressable pain point with a relatively hard solve, but then had a multi-product strategy behind it. So it's a real wedge strategy. And that's a company called Canary Technologies. And Canary is a great one. They just, raised a $30 million round led by Insight that we also participated in. So we were in the A and now the B here. Great company. And, their initial wedge, believe it or not, was the very simple problem that happens to be true for 95% of all hotels, which is this sort of group and special category where people would have to fill out some sort of a form with their credit card information and either in the old days fax it, now scan it and send it to the hotels. But 95% of hotels, typically when you go to them, you'll see at their front desk a 3-ring binder with a bunch of these sheets. So when the soccer team comes in with their 4-room block, 4 rooms, they've got a credit card authorization form and a piece of paper, right? So completely an operational disaster, bad consumer experience. So these guys saw that and digitized it, right? Which is complicated because you have to be PCI compliant because you're handling credit card information. You have to really build something that works. But they did. And they immediately just, got thousands of hotels enrolled on this product. But because they were, as a result of that wedge strategy, they had developed very good technology around payments and compliance. When the pandemic hit, they were quick to move into another product, and that was contactless check-in.
Right.
And sell it to their installed base. So it was a wedge and expand, right? And that was a hot tamale. And now that came pre-arrival check-in, now checkout, now messaging, so they've really accelerated this, which is a brilliant way. If you find a problem, the key is though that they didn't say we're just going to be the greatest digital authorization company for, they had a wedge and expand. So no one could ever say, well, that's a feature, not a business. They're like, no, we have a business, but it's going to start by a wedge on a feature. Good strategy.
And the features grow over time, right? Too. So
that's the point.
Not just you start with one idea, and that idea, you go from one idea to the next idea, and you evolve alongside your customers, right?
And in a perfect world, if you're an entrepreneur building a company, you have a view of that before you get started. Because if you just came and said, "I've got a one product idea," I'll figure out what to do if that works down the line. That's not going to get financed. But if you have a wedge and expand strategy, and here's my wedge, and here's why and how I think it can expand into other products. So, here's what I'll do after I get A done, I'll iterate from there, but I know the path. Then I can, as an investor, I can look at that path and say, well, that's actually really logical because it leverages the tech you're building. It leverages the relationships you have. And then now it's a business idea as opposed to just a feature hoping to come up with another feature.
Right.
Sure. Well, Glenn, we are going to have to heavily promote this to the startup community because
this is fantastic.
this is like, the Rosetta Stone, right?
The Rosetta Stone.
How you get funded, how you build the company, and how you succeed. Chris, we don't want to keep you too long. I'm going to give you 2 more quick questions on your way out. You're all over the place. How many miles are you going to fly in 2023? And where are you off to next?
Wow. 2023. Look, I don't know. 2019, I did over 400,000 flight miles.
Holy cazoli.
Which was an insane year. Almost 200, no, a little more than 200 nights in a hotel room in that one year.
Wow.
I don't expect that to actually happen in 2023. But no, I do travel a lot. We have great partners in Abu Dhabi, and we spend time in the Middle East. I think that region is really interesting,
right?
In terms of what's going to be happening there related to travel and tourism over the next 30 years, frankly. Explosive part of the world. I just got back from Singapore at the WIT conference there. I think Southeast Asia is very interesting and dynamic market, very large. And one of the things we love about that is, if you think about it, the traveler, right, is insanely digitized, 100% mobile and very digitized. The infrastructure is utterly fragmented and antiquated. I mean, that's the kind of disconnect that creates immeasurable opportunities for entrepreneurs. And so we're seeing great ideas out of there. Of course, LATAM, same thing, lots of interesting stuff. And we do a lot of work in Mexico. It's really a bit of a gateway for the rest of LATAM. Well, and then in Europe, I get to Europe all the time. We have 3 investments in Europe. We're making another one now.
Then I'm going to ask you one more question. I said it'd only be two, but you brought it up. China.
Yeah.
Is it going to change? Is it finally going to open up in 2023, both in the sense of business and outbound tourism coming out?
Yeah, I mean, for sure, tourism. I mean, I think we're already seeing, it's going to be interesting to see how China backs away from their zero COVID policy, but they're already showing signs. They're figuring out how to walk it back, which is basically walking it back without admitting that they're walking it back.
Right.
Yep.
I do think in Q1, China is going to open, and I think it's going to be a lot of outbound energy. Of course, people are going to continue to go to, it's a remarkable country, amazing people. I wouldn't make an investment in a China-based company or a company that's 100% or even maybe 80% focused on doing business in China, just because it's the tensions are too high. And, and we're not that kind of a risk profile investor. We're not today talking about our bets in Web3, right? Thank God, in crypto. Right. What a meltdown. Right. So I see China as just, at least China specifically, as too risky for us.
But the reemergence of China lifts all boats.
Oh, right? No. Listen, the dynamic of the China traveler and the China impact on the global travel, ecosystem is very welcomed. I'm just talking about a specific China-based business strategy. And it's not because I don't believe that the business would work. I'm just not confident that I could protect myself if all of a sudden the government made a decision to do something differently. I'd be, where if I have a business based in Singapore, doing great work in Southeast Asia with a China strategy, I feel better about that, right? There's laws there.
Absolutely. Sure. Yeah, that makes a whole lot of sense. Chris Hemmeter, thank you so much for being here today. That was fantastic.
My pleasure, guys. It was great to see you.
Terrific. Great to see you too. I want to thank everybody for tuning into another episode of Hotel Tech, Innovators and Influencers. We'll be back with another episode real soon, but this one should give you a lot to chew on. Until then, thanks and see you next time.
See you next time.